Welcome all to GEPL Capital's Market Outlook video. I'm Sanket Bendre from the research team, and let's start ahead with this video. So in today's video, we will be discussing certain key updates from this week as well as India's economic outlook. So let me share my screen and we will move right in. Okay, so in this slide, let's discuss each point in detail, I would say, so that we can get an update like what exactly happened in this week. So the first key update will be that China has lifted export curbs on fertilizers, rare earth, and tunnel boring machines to India. So this comes after the India and China meet that happened between both the foreign ministers of both the countries. So as you know, this assurance was conveyed by Chinese Foreign Minister Mr. Wang Yi during this recent visit to India. So basically, currently the shipments are understood to have already commenced and potentially easing supply chain bottlenecks for Indian industry and infrastructure projects. So as you know, that there has been a rising tension between India and US due to the implementation of tariff by US on India. So as a result of that, India has been working with several other countries as well to increase its export and offset the impact from the US's tariff. So this should be the first step as India and China have been working together over the last few days to reduce certain curves as we are seeing that China has lifted these export curves, and this should be positive for certain industries, including fertilizers as well as I would say construction companies as well as EV companies where rare metals are being used in the electric motors. So this is a very positive step from India as we are working towards offsetting the impacts of tariff. The next key update, as you know that on Independence Day, Mr. Prime Minister Modi had mentioned that they are planning to bring the GST 2.0, which will be a reform to the current GST, and this should be implemented on Diwali or prior to that itself. So a panel of state ministers have accepted the center's plan to reduce the forced rate system to two main slabs of 5% and 18%. So currently there are four different GST rates, which is 5%, 12%, 18%, and 28%. So this rates will be reduced to two rates, which will be 5% and 18%. And apart from the standard rates, there will be a 40% levy on the sin goods, which includes tobacco and certain luxury items. So this is a very positive step as center is moving forward by reducing the four rate system to a two rates system. So overall, a very positive update on the India's economic front as well. Given we are seeing progress in this GST front. The next update will be that the center, that is the Indian central government, has passed the online gaming bill. As a result of this, certain companies such as Dream11, Zupi, and MPN will be shutting down their real game money business. So this bill also bars banks and NBFCs from facilitating any transaction involving online games. So overall, this comes after the India's move toward reducing the impact on the overall society given due to this, I would say, due to this online real money gaming business, which has led to very losses to retail investors heavily. So as a result of that, we are seeing this move from the Indian government. The next key update will be then, as we are moving, talking about retail investors. So the next key update will be that market regulator SEBI has plan to increase the tenure and maturity of equity derivatives, which was mentioned by SEBI's chairman, Mr. Tumi Kanta Pandey. So this comes after that that 90% of traders have been suffering losses due to the FNO trades. So overall, the SEBI has been planning to remove the weekly derivative segment and increase the maturity. As we saw that in Bank Nifty, that happened over the last few months. Similarly, we should see similar kind of thing in NSE, it is Nifty 50 as well as BSE as well. So this is currently on the planning stage. We should see some further updates as will be disclosed by SEBI. The next key update will be that the SEBI has conducted a search operation raid at Avadhoot Sanket Trading Academy on August 20. So this raid was lasted for approximately 10 hours, and the raid comes amidst the growing concerns over the unregistered advisory services and alleged market manipulation by the company. So it has been mentioned that by SEBI that there could be illegal gains from the operations run by Avadhoot Chartered Trading Academy, and these gains could be in the range of 400 to 500 crores. So still there a lot of things is yet to be disclosed, which we should see over the upcoming days. However, this operation by SEBI is a very good thing for retail investors, given many investors have been following such fin influencer and doing trades without any proper research or recommendations. As a result of that, we are seeing this kind of impact from SEBI, and this is a very good thing in terms of protection of retail investor interest by SEBI. On the Indian economy activity front, so HSBC had released their data, flash survey data, I would say, and that it had mentioned that the manufacturing PMI for the month of July came at approximately 59.8, which is very good as it is still well above 50, and it indicates that the India's economy is growing. Furthermore, the composite PMI came at close to 65.2, and services PMI came at 65.6. So, this was a flash survey done by HSBC, and this strong data comes during this uncertain times of tariffs by America on India. So, furthermore, HSBC has also mentioned that the rapid upturn in business activity was driven by surge in sales volume, with total new order intakes rising at one of the quickest rates on record. So overall, we are seeing a good development on the manufacturing side as order book of the companies are increasing. We also saw that results by certain power and distribution companies as well as infrastructure companies as well and capital good company have been healthy. This as a result of that, we saw this good data, a good survey data by HLC. As the results plus this data further solidifies that these sectors are performing well, and manufacturing PMI has shot up to 459.8, which is a very good number. If we see in this chart itself, this 49.8 comes after a long time, and it was well, I would say, between this 2022 and 2025, this was among the highest. So overall, a very good data published by HSBC. So this indicates that India's economic activity still remains resilient amongst this uncertainty. So that's it from my side on this video. Thank you everyone for watching this video, and do like, share, and subscribe GEPL Capital's YouTube channel. And do stay tuned for more such insightful videos. Thank you.